And we want to talk about the financial impact of what's going on in the Ukraine.
Financial analyst Brian Amidei of Hightower Advisors joins us right now. Welcome, Brian.
Thank you.
Welcome.
Good morning. How are you?
Good, thank you very
Good,
much.
good. Yeah, the problem in the Ukraine is a problem for everybody, not just for Russia. I know their markets were down 10%, but as soon as our markets heard on Friday that Russia was moving into the Ukraine, the Dow Jones Industrial Average was down 100 points in less than a couple of minutes, and it did work its way back a little bit, but as we got more information on it over the weekend, our markets here are down and the markets throughout the world are down. Mainly because markets don't like uncertainty, and the uncertainty that you have over there is certainly real. Possible political action, you know, with different types of sanctions or anything like that, or military action. The markets don't like that. It all has an effect on the economy, not only here in the U.S., but also worldwide.
What implications does this have on all of us?
Well, you know, on us, I mean, obviously, everybody's invested in the market, whether it's your 401k or whether it's your stock portfolio. So on us, we have to ride out the volatility. You have to pay attention to the longer-term fundamentals of the market when you're investing. The longer-term fundamentals are very good. This is the day-to-day noise that people have to put up with when you're investing, and it's not a pleasant ride. But again, I do think the trend is upward, and I don't think we have to worry so much about what's going on in the Ukraine at this moment. It is hitting our markets, but I don't think it'll be long term.
And there's nothing you could really do to protect yourselves. I mean, when you get into stocks, that's
No,
just the name of the
there's not.
game, right?
Stocks are the most volatile asset out there, but they're also the asset that has outpaced inflation historically over time. The only asset that's outpaced inflation over time. You know, bonds don't, real estate don't, gold hasn't, commodities have not. So equities are very, very volatile. They don't like uncertainty. Any disruption to the norm, if you will send the markets one way or the other. So there's not much you can prepare for. Just have a stiff upper lip and make sure that you can ride it out.
And I understand this could impact the Ukraine's credit rating, right?
Oh yeah, they've downgraded the Ukraine's credit rating already, and you know, bottom line is the Ukraine doesn't even have really a government in place right now. I mean, they're kind of floundering. So the Ukraine's GDP right now is only about $4,000 per person in the country. Very, very low. So it's not much to worry about as far as them affecting the economy. But Ukraine is massive in size, and the bigger the country, the more commodities and the more produce that comes out of there, the more food that comes out of there. So there's definitely uncertainty, and that's why the markets are feeling it right now. I think longer term, I think if you stick with your investment plan, you're going to be perfectly fine, but Talia, there's nothing you can do to avoid this pain.
Scary stuff. That's why I don't get involved with stocks, but I do have a 401k.
Everybody does.
Well, thank you so much, Brian, for joining us today.
It's my pleasure.
And take a look at Brian's information on your screen. They are located in Palm Desert. You can always reach them at hightowerpalmdesert.com.
Thank you, Brian.